Diwali, and we saw a great Mahura trading session and then a mixed bag during the week. We got Chakri Lokapriya with us. Chakri, as we wind down today off its highs, just holding steady there. Sensex at about 59,900, Nifty still at 17,769, so still not having really breached that 60k or 18,000 mark. Tell us, Chakri, what according to you is the biggest concern right now? We're seeing what's happening on Wall Street, and it's a little bit crazy there. You've been tracking very closely the Fed's moves and its implications on markets globally. Let me first understand the rationale and really why you feel this could be a very dangerous kind of scenario moving forward.
Yeah, hello, Aabha. I think, if you look at what's happened in the US from the beginning of the Ukraine war to now, in a space of 6 months, US has increased interest rates by 300 basis points, something which was unheard of and not done before for several decades. And so as a consequence of that, India has had to also follow the US, raise rates by 190 basis points over the last 6 months, EU by 225 basis points. So the big risk is with the speed with which interest rates have gone up, businesses have to readjust their working capital and their financing costs. And this is a cycle which normally takes about 2 to 3 years when you raise rates by 200 to 300 basis points, which has been compressed within a period of 6 months. So some amount of readjustment has to take place for businesses in itself, and which means slower top line growth. That is largely reflected to some extent. In the case, look at Facebook, its valuation is down about 70% in the space of 6 months. And new tech in India is also down. I think that is some of the risk which is still present in the markets.
Okay. Chakri, in terms of the kind of market levels we're seeing, do you feel we're going to test further lows given this scenario? Because the IB seems to be suggesting that perhaps inflation will be within an acceptable range by early next year. Growth seems to be, not roaring, but more or less intact. So what do you feel is the likely outlook for India?
Yeah, indeed, that's a very good question. Inflation, while still at 7.4, above RBI's comfort level, has actually been trending down. And it's actually interesting that RBI is holding next meeting on November 3rd, which increases the possibility they might raise rates next week by about another 50 basis points rather than wait until December. So I think that is telling you that the inflation is still a concern, and central banks are using, RBI included, to cut down inflation. Now this will have an impact on top line growth. Still, earnings are growing at a healthy 12%, down from the 16-17%. But I think that's where the risk lies, is top line starts slowing down for India.
Okay. Amongst the latest set of earnings, Chakri, what stood out to you, and what are the kind of cues you're taking away from this earnings season so far?
The good news of the earnings season is, if you look at automobile or consumer discretionary sales, are showing some amount of strength. But the real good news is, they're still below pre-pandemic sales, automobile sales. So which tells you it's not an overheated market, demand is coming back. And if you look back at the pre-pandemic, it was actually, they never really suffered in the rural areas because it was not such big outbreaks. Cities, employment is returning back as the economy recovers. I think these sectors, which are also employment-intensive sectors, therefore higher revenue for the government, will kind of provide a support to the Indian economy and to the stock market.
Absolutely. Within the auto pack, Chakri, is there a preferred pick for you? I mean, Maruti's made a strong comeback, of course. Two-wheelers, it's still a little hazy. Would you have a preferred pick, or would you rather go via perhaps ancillary plays or an EV play via Mahindra, for instance?
I think the answer is all of the above, in the sense that EV will increasingly make an important component of valuation, even though the big sales is a few years away. From that context, I think TVS Motors is well positioned. Hero has a good range of products. Mahindra has a good range of products in the four-wheeler space. So that way, EV is increasingly becoming important. Second, the regular passenger way, the ICV engines will continue to obviously come back, and the sales are still below pre-pandemic levels. So a combination of both will kind of propel the overall volume growth, which is still below pre-pandemic levels, and the valuations are clearly on your side. So I think that automobiles as a space look good, and commercial vehicle sales have not yet picked up, and therefore that will be the next leg.
Okay, just looking at a couple of the other stocks that are buzzing today. I mean, we had a Vardhaman, which didn't really excite the market with its earnings. Pharma names are trending lower today. Lupin, Pfizer, Granules. SBI Cards is one that's taken a bit of a knock today. However, Infibeam Avenues has hit the upper circuit, up about 20-odd%. I'm not sure if that's one you track, Chakri. Any comment there on an Infibeam?
Infibeam, I don't really track, but I think that's one. Basically, what it tells you is there are a number of stocks which are quite, the valuations are really low. And so any meaningful piece of good news is taking the stocks higher. And that's a trend that we will see in many stocks across sectors.
I also want to bring up Tata Chemicals because that stock also took a bit of an after earnings this time. Tata Chemicals, Chakri, I'm not sure if you've looked at recently, but I know that you look at the group overall. Just want to get a view also from, specialty chemicals being a space that everyone's always been fairly bullish on. Some of that euphoria has cooled down over the last few months, but does this stay on your radar?
While the euphoria has kind of marginally come down, Tata Chemicals as a company looks very strong. The space is very strong. It is a combination of various things. It is one, export business as a component of overall revenue is rising. Second, they are more clearly delineated product strategy. China plus one clearly helps. Okay. And then the EV vehicle space, the chemicals required for the batteries and other components of the EV space, and Tata Chemicals will play a very important role in making some of those specialty chemicals for the EV space. So Tata Chemicals looks good, and the chemical overall space also looks very good.
Okay. One of the other pockets, of course, is some of these tech plays. So let's bring them up. I mean, Nykaa, for instance, is not looking like the darling of the tech plays on the markets anymore. PolicyBazaar, PayTM, all of them, in fact, sliding as the anchor period has ended, the lock-in period for anchor investors. What's your take when it comes to some of these tech plays, Chakri?
I think tech, we kind of divided into new tech versus the traditional IT services. The new tech, they were all priced, the IPOs. Nykaa, after all the fall, still trades at about 160, 170 times earnings. And they were priced off the Facebooks of the world at the peak multiple when the sentiment for new tech, not just the sentiment was good, but also the financing cost for the new technology businesses, where the cost of capital was far lower. With interest rates moving up so fast in the US and in India, the cost of capital for new tech dramatically rises. So I think there the valuations are still very high. Nykaa still trades at 150 times plus. On the other hand, the IT services companies, their valuations are 15, 16 times. Revenue is intact, not just intact, accelerated from last year, growing at 5-7% a couple of years ago, pre-pandemic, now 15% plus. And if there is going to be a recession, there will be more use for IT services because that improves productivity. So IT services well placed, new tech, and not so much.
All right, fair enough. Now, Reliance, let's take a look at that one. It's powering ahead despite a weaker set of numbers. Well, disappointing for the markets. I wouldn't necessarily say weak, but, markets probably expected a little bit more. The stock does seem to be rebounding, though, since then. Reliance continues to be on everyone's portfolio, Chakri. But do you see a reason for skepticism around its growth going forward?
No, I do not see any skepticism. On the other hand, I think Reliance as a company is poised to do well. It's also added another facets to its sum of parts business, which is financial services. So you have telecom, retail, chemicals, O2C, and refining. Each of those businesses is doing well. And on top of that, now they're going to make a foray into financial services. So I think the sum of, and of course, it's platform businesses. So if you add all of these things up, I think the outlook for each one is good and the valuations are actually on side. So I think as a company, it does well.
All right. Chakri, what about some of the financials? What's catching your eye? PSUs, private sector names, the dark horses, or the safer heavy hitters?
Emma, I think it's the corporate banks, corporate facing banks rather, the State Bank of India, ICICI, Axis Bank. Now, all these banks have both a corporate facing business as well as a retail facing business as well. Corporate, clearly retail spending is coming back, but more importantly, corporate spending will pick up at some point once the companies know which is the close of the interest rate peak. So credit growth has been picking up, and I think that will only strengthen further. So far we've had an NPA cycle which was going up and up. That has kind of plateaued. So I think now banks are in for an up cycle of margins. And because, with the rising rates, that will also benefit their margins, not with deposits not ticking up as fast in continuation. So I think corporate facing banks, both PSUs as well as private, SBI, ICICI are well positioned.
All right, great. Chakri, always a pleasure chatting with you and getting a sense of how things stand. Let's see how the global picture evolves. We're going to leave it there right now on this edition. Thanks so much for joining us in this station.